Hello everyone, welcome back to the channel. Today I'm going to go over the market. I'm going to give a quick market update and see where things are at right now and what I anticipate in the coming weeks. So if you haven't subscribed already, subscribe to my channel, follow me on X, link in the description. And yeah, let's get started. So starting off with the SPY, where do I see this coming? It's been trading the past entire week. It hadn't had a red day in a single day. So what I anticipate is to at least in the coming week or coming weeks touch this $574 level. I have this alert over here. This is where the 200-day moving average is. Why do I expect that? I expect it because it's been trading. First of all, going up, pretty much going parabolic. It's been up around 25-30% since the lows. It's been hitting the top of the Bollinger Bands for a while now. It's the RSI is being overbought. Is overbought. Stochastics is overbought. MACD has been going pretty much parabolic. Everything is overbought right now. If you look at the weekly chart, as I said, anticipated $574 level. Why? If we look at the weekly perspective, there has not been a single runaway gap up. Not a single runaway gap up on the weekly chart. I was not able to find a single runaway gap up going back to the 2000s. So this gap up is not. So this time is not going to be any exception. So I do expect it to go back to test the 200-day moving average, and from there we can see where things are at. I don't think the Moody's is going to be pretty big event. What I do expect is just a technical pullback before resume the trend upwards. If we break this 200-day moving average and see multiple closes before, then I'll change my perspective, and in that case, we can head lower to this area over here around 540 level. So that's what I expect on the SPY. What do I expect on the Qs? Let me show you. So the Q is the same thing, the same exact setup. Five consecutive days in a row. 200-day moving average, where the gap fill is and support is. Weekly, we had a runaway gap up. Not a single instance where I was able to find a runaway gap up, especially as big as this. So I expect it to at least fill this gap. That would be around the $494 level, roughly a 4.5 to 5% drop from here. Let me see. Yep, so 5.5% drop from here. And if we see multiple closes below this level, then I'll become more neutral to bearish. But right now it's just a technical pullback. The Moody's news is just a pullback. It's just gonna be technical pullback in my opinion. Before if it becomes a greater event. So that's what I'm anticipating on the Qs. Dow looks pretty good. No technical gap up on the weekly chart. You see, this gap was entirely filled. No gap up over there. Weekly closed above the 20-day moving average over here. Nice. No gap up above the 20-day moving average. Pretty good ice cream bar candle setup over here. Bollinger Band, it hasn't touched the Bollinger Band. RSI has been overbought, but it hasn't touched the upper side of the Bollinger Band yet. And it closed above the 200-day moving average. So two closes above the daily 200-day moving average. So that is a pretty good sign. I believe the Dow has been a laggard because of UNH. I'll talk about UNH in a second, but that is one of the reasons why the Dow was down significantly. But I see more bullish momentum going for the Dow compared to the rest of the ETFs. Let's take a look at IWM. It's hard to chart this because technically it's just been range bound for a while now. So it's been range bound over here, going up for 1, 2, 3, 4, 6 weeks now. Resistance at 20-day moving average. A huge gap up. Not a single runaway gap up was here over here that was not filled. This one will also be no exception. So pretty much just range bound. I would suggest stay away from the IWM no matter. I do know that there are many influencers on X that Shill, IWM, and small caps. But right now, uh, until we see decisive break above this $230 level, everything is just range bound. So there's that. Magnificent 7, Max 7 stock, same thing. A huge gap up, not a single gap up in the weekly candle chart. So we could see a gap fill around the $48 level, especially. But before that, the first target would definitely be the 200-day moving average, which is at 49. So 48, 49, give or take. That's roughly a couple of percentage down, roughly like 6% down from here. And if we have multiple closes below the 200-day moving average, we'll reevaluate things from there. But until then, 200-day moving average would be a pullback area. So something like, I would expect something like this. Let's see. Let's go on to XLK. XLK has been pretty much overbought. Same thing as the QQQ. Same scenario applies over here. Gap fill. Because this right now is at a technical resistance area. So this area is a technical resistance area. It'll pull back at least to 219. So again, over there, a couple of percentage. So XLK, QQQ, same thing. It's a tech sector. One thing I want to talk about is XLV. I think XLV looks more bullish compared to XLK, since we have this bullish divergence over here that I've talked about a couple of times. So this, and well, this is going upwards. So it's a technical bullish pattern, which I do expect it to play out in the coming weeks, especially as UNH has a lot of insider buy as a CFO. The CEO have bought like more than 25 million combined. So I do expect it to go upwards. Let's talk about this is Japan. The Nikkei getting rejected off of this level over here. So getting rejected off of the 200-day moving average from here. So we'll just have to see. I do believe that we're going to have a downward pressure over here, since it's a pretty significant resistance area, and also it's been pretty much range bound. So stay away from Japan stocks. Also a huge grave stone kind of doji over here with a huge leg up. Let's talk about the FANG stocks. The Magnificent 7. Let's see, Meta over here. Let's look at the daily chart. Pretty much overextended at this point. A huge gap up over here. I do expect if the entire QQQ is going down, then I do expect this stock to go down to retest its 200-day moving average. So let me bring up the arrow over here. So something like this 590 level before we see a resume of the trend. So I would expect it to come back to $580 level. Let's talk about Apple. Apple has been pretty much range bound over here until we see a decisive breakout. I would assume that it's just range bound, since we haven't had a bigger setup on Apple. It's just been range bound for a while now, because I believe of the tariff news. Yeah, there's nothing to see at Apple over here. Amazon was I posted a chart that Amazon was trading above out of the Bollinger Band, and so we had a correction of roughly 5%. It's back inside the Bollinger Band, but I do have an alert over here at the $200 level, which I believe it'll come back if it hasn't already. I believe the pre-market action is in play right now. So $200 level will be the first level. That will also $200 over here. This is resistance. If we fall below this, then I would see it to $193 level. So that would be the gap fill. But right now, I just want to see things bounce off the 200-day moving average. This would be a very bullish setup, because this would come under the breakout, retest, rebound setup. So huge breakout, huge momentum breakout, huge gap ups, retest of the 200-day moving average, and then resume a rebound. So that is what I'm looking forward to in the markets right now. If we close below the 200-day moving average, then things would be a bit more bearish. But right now, we can't assume anything bearish until we break below the 200-day moving average. So this would be the first area, 200, the 200 level. Netflix has been on fire lately. While look at this, let me show you something. Yes, the weekly chart. So look at this, price going upwards, while price has been making RSI has been making lower lows. This is a textbook bearish pattern, which I believe it'll play out. It's been trading above the Bollinger Band. Every signal is overbought in the daily charts. Look at this. Also, this is also a bearish divergence on the daily chart. So this and this. So also a bearish thing. I do expect it to come down, and I do expect it to fall. I have no idea. In fact, no one on earth has any idea when this entire bearish setup would actually play out. All we can say for right now is I do expect it to be a $942 level. But since Netflix is trading at all-time valuations, I don't want to trade the stock until I see it in the value zone. My value zone would be around this level over here, 830. So if it's at 830, that would complete its bearish setup. That'll be a 30% drop. I'm not sure if it'll actually come or not, since these stocks tend to remain overbought for a long period of time. So you see, like over here, it's support, and if we have another support, that would be a great buy area. So I'm definitely looking at Netflix, but right now at these valuations, I wouldn't want to trade it. Google is very good. Google is looking very good right now. If you look at, in fact, a couple of days ago, I made a video about my two favorite stock picks. That was UNH and Google. So why Google? Google, look, resistance over here, support over here, support over here, and this goes back to 2021. So that's around 4 years of support resistance. It's just simply flipping the previous resistance into new support, and it almost bounced off this 200-day moving average. So and there's also no gap ups on the weekly chart. Daily, if we can see a close above $173 level, that would be great, because the last time it closed above 173, look where we went. So it was 160 to 208. So that was a pretty good 20%, so 32% gain. Before that, from 133 to 192. Before that, 100 to 155. So I do want to see a close above this $173 level. In fact, let me just, because until that, it can either range bound. It's either range bound. It can like do something like trade in this setup over here like this, or it can trade all the way down, then up, then down, then up, or it can just slowly make its way up. So I'm just gonna put an alert at the $173 level. So over here, and this would be amazing if we can break above. Microsoft, same thing. It's been pretty much going parabolic. Look at the weekly chart. We're very near all-time highs, and the stock has been pretty much going over parabolic, and it's very overbought. So I would expect it to first come down to the 200-day moving average. That's around 415. So I would, as I said, the theme of this video is breakout, retest, rebound. So that's the theme of this video. That's what I hope and seeing right now. But right now, I think we're going to see a pullback. Things are very overextended. So from Microsoft, that's going to be around an 8 or 9% drop from here. And after that, we'll evaluate things if we can rebound from the 200-day moving average. So I'm also going to add an alert around the $415 level in Microsoft. NVIDIA, this is like, It's been trading outside the Bollinger Band, extremely overbought, RSI overbought, MACD overbought, stochastics overbought. So again, same thing. Breakout, retest, rebound setup. I would expect it to uh, do something like this, and also have this. Alert over here. So that's going to be roughly a 70% drop, and we'll evaluate Tesla. Tesla, same thing. I would you see it's been trading this like box kind of thing, and then it broke out. I would love to see this rebound to over here. If it can go back to $300 level, that would be so bullish. That would be just insanely bullish. You see, I have an alert over here at $305 level. So that's gonna be roughly a 12-13% drop. This would be incredibly bullish. I'm so bullish on Tesla on the long term. And if we can actually get a retest of this resistance, which has played as a significant resistance going back to like 2021, so resistance, support, resistance, support, support, resistance, and if we can see one more time, I think this thing is gonna fly. Then Bitcoin has just made a huge and the daily chart is right now making a huge bearish engulfing candle. It's been trading pretty crazy if you look at the 4-hour chart. So huge candle up, huge candle down, huge candle up, huge candle down. So I don't know what to make of this, but this price action is so crazy right now. But I do expect it to at least, I have this alert over here, $97,000 level. So if we can come back down, if the equity markets are going to fall, then I believe this would be an amazing thing to do for Bitcoin. So retest this massive area of support over here. You can see this alert that I put up. It's been an area of support and resistance since November 2024. So if we can see a breakout, retest, and then rebound, that would be amazing. Let's look at Ethereum. As I said, I made a couple of videos before. I told you guys that I want to see decisive close above the 200-day moving average. Anything below this 200-day moving average is just going to be noise. So right now you can see that pretty much it's been all noise. So pretty much downtrend, uptrend, pretty much consolidating over here. So I want to see a close above, multiple closes above $2,700 level. I would be bullish then. Also, I told you guys about the 200-day weekly moving average. It also acts as a resistance over there. So until we see decisive closes above these moving average, this is just bearish. No need to trade these. No need to invest in these. There are many other places to invest capital. MicroStrategy has been going pretty parabolic. Weekly chart, if you look at it, it's been trading outside the Bollinger Band now. I believe that we can expect to come down to this level over here, which was previous resistance. Again, same thing, breakout, retest, and then rebound. This will be the most bullish thing for stocks right now, but that would be 20% drop, and from current levels, that would be a 15% drop. Let's look at Mara. Mara, as I said, I also posted charts about this. Anything below the 200-day moving average, just noise. It's been trading in like this box over here. If we see decisive close, if we see multiple decisive closes above the 200-day moving average, I would be bullish. But as you see, 1, 2, 3, 4, 5, 6 days of six green candles, or 6 weekly green candles. I believe that we're going to have a pullback over here. Let's look at one of my favorite stocks in the market right now. Let me go down to UNH. I've talked about the stock a lot. I've been posting a lot of content about this on X. So you can see this, a lot of content about this. UNH insiders buying. So you can see the new CEO of United bought $25 million worth of stock on Friday. So whenever you see insider buys, like insiders sell a lot of stocks, right? They can sell for multiple reasons, like pay their mortgage, I don't know, multiple things. But when you see insider buys, they only they only buy at significant levels. So as I said, XLV on Friday, XLV was the only thing that was in green. Mostly everything else was pretty much pancake flat. So I expect also, you see this is still outside the lower Bollinger Band. So I do expect to see a gap fill at 307, and everything is still incredibly oversold. So RSI oversold, stochastics oversold. Look at the MACD, and this is my favorite indicator. So if I see a candle out below, like oversold Bollinger Band, RSI oversold, stochastics oversold, MACD oversold, and this oversold, this is a confluence of indicators. This is almost a guarantee that we're gonna see a lot of great opportunities in the market. So where is UNH right now? UNH is trading at, I believe it's $294 right now. So I am incredibly bullish on UNH. Let's look at the weekly. Look where it found support, right on the $250 level. RSI, same RSI as oversold as to 2008 financial crisis. So look at where the RSI is. So same as the 2000 financial crisis. Stochastics oversold. And let me add another indicator. So price, let me add the PE ratio. Look at the PE ratio. It was trading at a 10 before it bounced off to 291. So a PE ratio of 10 with a stock that has fundamentals like this. Let me quickly pull it up. So a growth stock that has fundamentals like this, revenue, look at the revenue, look at the net income, look at the optimum revenue, look at shares outstanding, look at every metric, almost every metric of this company. It's a value stock that has dropped nearly 60% off its highs. So this is incredible value, not financial advice, but I bought options over here around the $250 level, and I'm up more than 50% on those, and expect to be a lot more on those. So gold, let's look at gold. Gold, I do expect it to have a little more downside, especially around the $3,000 area, $3,000 region. So if it can retest this 20-day moving average, look at the gold chart. It always found resistance on the 20-day moving average before like consolidating and going higher. So look at this. This green line, the midline is the 20-day moving average. So resistance, support. Like it follows this. And if you see close below this, then that means that we're in a more of a consolidation period. I do believe that gold will go to $5,000 level, probably more. But right now, look, by the looks of it, it's been going pretty much parabolic. If you zoom out on the chart, it's been going pretty much parabolic. And I think we're going to have over here, it's like more like linear kind of fashion going up. But right now, it's just going parabolic. I think we're going to see $3,000 to $2,800 levels. So around this level up here, let me also add some indicators, alerts over here. So 3,000 and the next would be 2,800. These two levels would be amazing buy for gold. But right now, I believe there's more downside ahead. So that's pretty much it that I wanted to cover. That's a weekly market update. If you have any chart requests, let me know in the comment down in the video. Follow me on X if you have any chart requests or any questions. Shoot me a question, shoot me a comment, and I'll happily respond. And thank you for watching, and see you in the next video.